About succession planning of founders, of startups. But what about VC firms, private equity firms? And with that, I now invite Mr. Gopal Srinivasan of TVS Capital here on ET Now on Startup Central, because it seems like TVS Capital and the TVS Group is certainly taking a lead when it comes to succession planning and introducing professionals. Mr. Srinivasan, it's always a pleasure talking to you. Thank you for giving us time today. So tell us, what is TVS Capital up to an outsider with the appointment of Ms. Anuradha Ramachandran recently? It seems like we're seeing more professionals in the group and succession planning which is underway.
Thank you always, Nayantara. To be a pleasure to be with you. And thank you for having me on the show. You know, I think fundamentally the purpose of every fund is something that we should be clear about. Ultimately, in our case, when we were founded at the inspiration of Professor C.K. Prahalad, going back in time nearly 15 years, was to empower next-gen entrepreneurs. For us, it was not an empty slogan, but a real mission on which we wanted to be. So we believe that funds are places which nurture and develop the growth entrepreneur, in our case, and essentially take great pride in making sure that we have been able to contribute and create and curate a very powerful set of people who can take benefit from the ecosystems that funds tend to bring. So from that point of view, I think developing a platform that can keep on going on and in the future, funding these growth entrepreneurship, which is our Series B, Series C in the current language of the world, is very, very important. So I think the motivation is to create a platform which will sustain itself for time rather than depend on 1, 2, or 3 individuals as we have been, like all other funds have been. I think that's my motivation. How do we create this platform that can work for as long as one can visualize? And that motivates me, I think, every morning to come to work as much as the fund itself does.
Always. So what time do you come to work, Mr. Srinivasan? That was an open-ended statement by you. Are you part of the 5 a.m. club? How do you spend your mornings?
Oh, no, I'm very clear. For me, 6 to 8 a.m. is my precious time for meditation and exercise and reading my Vedanta. Without that, my day would never start. So the day only starts after those 3 important boxes are checked.
Fair point. I thought I'll just ask because, you know, people always want to know what successful people do in the morning. Morning, of course, defines the rest of your day. So tell us, Mr. Srinivasan, with Anuradha now coming on board, and this is something your portfolio companies would have already been apprised of, but for others and for all of us, how involved will you still stay?
I stay totally involved, but not necessarily playing the same role, Nayantara. I think for us, the main thing that gives me a lot of inspiration, other than our entrepreneurs, are clients. I love spending time with our clients, and we're so fortunate, so privileged, I would say, to have a group of clients representing the Indian institutions, the Indian families, the Indian HNIs. So meeting them is a phenomenal source of energy and learning. So when you go to a large family business, wherever it is, listen to their ideas, their vision of India. I draw a lot of inspiration and energy from our fact that we are a 100% rupee capital fund. Hope to maintain that as we go into Fund 4 also. And so spending time on strategy, spending time on people, spending time on clients is probably where I will end up. And I'm really looking forward to that as we go into Fund 4.
What has been the reaction when you've been going to LPs, GPs for the new fund? You know, we've seen India's outperformance in the stock markets. Is that also the case in the private markets?
I have not really gone as yet to any particular LP or with this particular idea of a new fund, but we constantly meet them. So they are the ones who actually ask us saying, when is the new fund? I'd like to invest. I would like to make reservation for you. I think availability of capital for funds with a longer track record, good teams, are not necessarily very difficult. So we don't have to worry too much about it. Always Indian capital is at a shortage. So one should go carefully keeping that piece in mind. But what people ask me is very, very interesting, Nayantara. What they say is, look, what do you mean by succession? Is it a person to a person? Or is it a set of capabilities getting transmuted to a set of people? So for example, you have a network. You're able to access the banking system. You know what's happening in the digital banking world. You have connections in Bombay or Delhi or Bangalore or wherever. you transfer not just the role, but transfer the relationships, the capability? I think one of my friends is the executive director of ICICI. His name is Anup Bagchi, and he defines it as how do you de-Gopalize TVS Capital? And what that really means is the person is not the issue. The issue is capabilities. I think succession, I'm realizing more and more, is the first time I'm really doing it, but I've been guided by many of my advisors in the fund, is to transfer capabilities, however difficult or onerous that sounds. That I think is the main thing. Public policy work, in touch with the banking or the enterprise SaaS ecosystem, in touch with the startup ecosystem, in touch with Nayantara. So I think all of that has to transfer in its own way. And that I think is what I'm enjoying very much, as to how to conceive and implement that over the next year or two.
Mr. Srinivasan, we're of course talking at a very interesting time at TVS Capital as the section planning is underway. But just given what's going on, will you be candid enough to tell us what's happening with the valuations of your portfolio companies? As an outsider, it seems as a deal activity in the ecosystem is also picking up. Are things improving? Is the funding winter behind us? It seems too early to say spring as yet.
I don't think the winter has even hit its peak personally. And it really depends on whose point of view that you're asking. So ultimately, the way I understand, very simply, Nayantara, there are two sets of people in this business. One is basically people who are playing very long term, who are really worried about the value the business is creating in its operation, in its capability, teams, customer acquisition. And there is another set of people who is very focused as if this is an option trading business and the option is on the next round's valuation, and therefore create more and more optionality in each business so that option value goes up. So as you go earlier, the option value business is a bit higher. As you go later, the value creation is a bit higher, but it varies from company to company. So as far as I see it, this phase we're going through is affecting most of the people who are in the options business, because that next round is getting postponed, or the next round is happening at a lower markup, and God forbid the next round is happening at flat or below, right? So that group, which tends to be in the earlier stage, definitely is being affected and will continue to be affected, in my opinion, for some time. Maybe the next, who knows when spring will come. In America, they say there will be a gopher that would come out in Philadelphia. And once the gopher comes out, when winter is. There's a movie about it. So I don't know when the gopher will come out here. I don't want to take a bet on that.
In fact, Jamie Dimon, just today, at the time of this recording, is talking about a US recession in 6 to 8 months. Sridhar Vembu or Zoho is saying if that happens, SaaS will be really, really badly hit off. And we know how SaaS was a winner since 2020. But Mr. Srinivasan, I want to come to another point. You've been candid enough to talk about the winter season, but is there any kind of a fight that is also on between the early stage guys and the later stage investors? Now, the early stage investors have probably seen a drop in their valuations. The late stage investors will want a further fall in valuations. In the middle of all of this, the founder and the startup is stuck looking for funding. What's going on?
I think you captured the point very succinctly, Nayantara. That is always an issue, right? Because in some sense, you're waiting for the apples to fall and gather them in your basket, and you're hoping they would fall in a manner that would suit you. I think the major change I see here is, like in every single recession, is basically the survival of the fittest and the flight to quality. So in the early stage also, the seed stage will do very well now, because there are going to be some great people are always coming out with great ideas. And that's what the seed stage bets on. And they're not worried about the next year. They're all worried about the next 5 years. So seed stage is actually seeing, in my mind, a fair amount of traction. Whereas the Series A, maybe the Series B is where you're going to find there are going to be a lot of concerns, right? So I think the growth investors would do well not to try to time the bottom. It's never good to time bottoms and wait for it. So it's better to keep on your mind only on one thing. Do you really have a great founder, a great set of founders in a space that is going to have a lot of growth? And just stay focused on that. Don't over worry. Don't try to do distress. Don't do the crossing the chasm strategy of finding out who's going to fall into the chasm. It's better to stay very, very focused, in my mind, on just great founders and great spaces. So I just think that once we get into this conflict, which you correctly pointed out, there is a moral hazard. You'll probably end up, who falls the most? Probably the companies that are most affected by gravity, you know. And do you want to then take that bet? So it's better to just stay with your standard formula. Great founders, great spaces.
And when you look at your portfolio companies, would you say that there has been a drawback cut in valuations? The founders are getting more realistic, a renewed focus on the bottom line, path to profitability?
I would say two things, Nayantara. We have not seen any change in valuation, but what we are really seeing is the future rounds, because there are multiple investors in India. The dharma of investing now is 4 or 5 investors in every company, right? So every investor will have different behaviors. The next round getting probably postponed a bit. All of them are very well-funded companies, don't affect their business. So that I think you'd certainly see founders being cautious and saying, let me not look for a next round now. Let me just focus on building the business. And definitely cost control for those who are more overseas focused. On the other hand, Nayantara, just the reverse. Companies that are Indian focused are adding people, adding capability, because India, the market position in say in financial services or digital financial infrastructure is super positive. Everything is growing at crazy rates, and I suspect will continue to grow because it's driven by domestic consumption. So Indian focused businesses are very different. We only have one business that's overseas focused, and it's a very small business. So it's too early to call for us. But for people who have large SaaS companies focused largely on overseas markets, who can disagree with Cesar Vembu?
Mr. Srinivasan, I know you are supposed to love all your portfolio companies equally. They are like your children, and we are supposed to love, and we do love all our children equally. But we are also able to figure out qualities. Which one will do better, which one might be more successful. So if you would permit me to put you in a spot and say, if you look at your portfolio companies right now, how they're poised, which will be the next big thing, the next big winner?
No, Nayantara, you know very well that I want all of them to be the next big winners. But each of them are in a different stage. So, for example, we have 2 companies or 3 companies that are pre-IPO. So there, in some sense, you can argue that they are more cooked companies. And we have a couple of companies that are not yet pre-IPO, which are in growth stage. So I am hoping when I spend my time and energy, it tends to be with those 2 companies. And one more company just joined 3 companies. So those 3 companies is where I expect the winner to come from. Our most recent investments are in Vivriti Capital, Incref, and in UB. So they are the ones we spend our time on, and we expect all of them to be really, really successful winners in their own space. For us, 5-Star, GoDigit, and Leap all move to various IPO stages. So they are moving from growth to the next phase, which is the public market phase.
Well, GoDigit IPO, of course, is coming up. There's been so much that has been said, backed by Prem Vatsa, HDFC looking at it. What's the update, sir?
Well, I think the good update was last week when the SEBI lifted the abeyance on the processing of the IPO. So that, which means IPO is now proceeding. There was some technical issue around the number of investors who can issue shares each year. So that's going well. 5-Star is again reopened the IPO. I think this month they will open in October end. So, and Leap is also looking for IPO sometime in the future. So I think the IPO market is clearly, in fact, today's headlines in all of newspapers like ET and others are all about the upcoming IPO boom. And I think the IPO market looks good for India. But I just hope that with the winter in Russia and Ukraine and Europe and North America, get bad both from a humanitarian perspective as well as an economic perspective.
Mr. Srinivasan, thank you so much. It's always a pleasure talking to you. Here's an open invitation. The next time you're in Delhi, let's get a cup of coffee together and do an in-person interview.
I look forward to that, Nayantara. Thank you very much. Thanks a lot. Bye.